Hey you guys, what's going on? Shaquan here from SLFX Trading, and today I want to talk about moving averages, and I actually have a lot to say about moving averages. Okay, so I do not necessarily use a lot of indicators. I like to use price. I am a naked price action candlestick trader, which means I trade based purely on candlesticks, no support or resistance, barely any trend lines, no key levels, just price. Okay, supply and demand trader here. So you'll mostly see I have price note tools in a zone or so on my chart. And it's not even like a really stretched out zone. It's like not that many, right? But let's talk about moving averages and what moving averages are. So moving averages, think of the word average. Remember in school we learned mode, medium, and mean. And we would get the average of a group of data set or a group of numbers, and we add them all together. And how many ever numbers there were, we divide that total number by however many of the data sets that was there. And then you divide it and you get a number, an average of all of these numbers together. And that is what the moving averages do. And you think about the word moving, it's measuring the average price as price moves based on the numbers of candlesticks that you want the moving average to measure. So if you guys look on my screen, I have two different charts, same currency pair, same time frame. Great British pound versus the United States dollar. Daily time frame, both using the Owenda exchange on TradingView. TradingView.com is what I use. So I want you guys to pay attention to the moving average that I have. I have the moving average MA and then the EMA, which stands for the exponential moving average. And some people use the simple moving average. So basically the moving average is the tool itself. It's gonna measure however many candles, the average of the price of the candles that you try to measure, the open or close pricing. We'll get to that later. The exponential moving average is gonna measure those same prices based on the candlestick, but it can change quicker due to the next candle that forms or the next set of candles that form. So it's going to stick more so with the current price. And the simple moving average needs to have all of the completed candlesticks in order to get a true average of price movement, right? So there's no right or wrong with what moving average you use. It just depends on which one you want to use. Now, as you guys can see, I'm using close as my source. Close, which means I want the average to measure every candlestick once it closes. I want it to measure that price. If you use the open source, if it says open, or open, close, if you use open, it means that you want it to measure the open price, the beginning price, where price begins to form the candle, right? Which is why we say that the open of the candlestick and the closing of the candlestick, like these things are important. So I want you guys to pay attention to the left-hand side of Great British Pound, my chart here, because my moving averages have lower numbers, 13 and 16. And what this means is this. It's going to measure, my moving average will measure the closing price of every 13 candlesticks. My EMA, my exponential moving average, is going to measure every 16 candlesticks as price begins to change. Okay, so now what it's doing is measuring the current trend and it's sticking closer to price. So the more that price rejects off of my moving average as it's going up, these are the candlesticks, the data sets, the 16 or 13 candles that price is moving to say, this is the trend. It's confirming what I see, right? Because remember I told you guys I am a naked price action trader. And if you're like me, you already can see what price is doing before the moving average. So if I were to put my tools on this screen, the moving average should confirm it. But it's not the crosses that I'm concerned about. It's the distance or space in between my moving average. So if I get some space in between my moving average, that lets me know that the trend is valid. And then each time that price rejects off of it and we get a little bit of space, it lets me know that, yeah, there is a trend. So it's not the crosses, because to me, crosses means indecision. I don't care if the red is over the green or the green is over the red. They're measuring the data set, these numbers. So the crosses don't really mean too much, okay? It's either price is over the moving average or it's under the moving average based on the setting. So the lower in number, the closer to price action, the moving average will touch. Now, if we look over here to the left, to the right-hand side, I do not have the 13 and 16 on, but I do have the moving average at 50, which means it's going to measure the close prices of every 50 candlesticks that forms. And then we have the number 100. So that means that the EMA is going to measure every 100 candles. Now, you guys may ask, well, why are your settings different? For this particular moving average, I chose the popular numbers I know people use. I normally use 13, 16. I noticed that people use 50, 100, or 200. But if you guys notice, the moving averages are further away from price, or they're not touching a lot of price. The more candlesticks that you want your moving average to measure, it's going to be further away from price action. But it's the space in between you're looking for. So if your moving average has space in between, if you're using more than one, then that means that there is a strong trend. They're measuring the same thing, just different number of candlesticks. Okay. And the further away from price it is, and price is above that moving averages, both of them, what does that mean? That means that there is a strong trend, right? And if price is in between it, once again, it could mean some indecision. It could mean a transition, whatever the case may be. But if you read price alone by itself, like I said, you're going to use the moving average as a second confirmation. Okay, so as long as price is above that moving average, whether you're using 50 or 100, strong trend up. If price goes under it, then yeah, price could be going down. For how long, that's up for you to determine how long you want to be in your trade for. Okay, now let's talk about time frames. The different time frames you use, your moving average still measures the same amount of candlesticks. The higher in time frames you go, the less amount of candlesticks that it's going to measure. The lower in time frames you go, the more candlesticks it has to measure, but it's still going to measure the same amount. The reason why these indicators lag as well is because you have to think about it. If you want your moving average, whether you're using the regular moving average, exponential, or simple, especially particularly to the simple, if you say, hey, measure every 50 candlesticks or every 100 candlesticks, if it's only on the 35th candlestick, if it's only on the 49th candlestick, it's not measured all the averages yet. So that's why it's lagging behind. It's not measured all of the candlesticks. So your eyes see first what you needed to see, and the moving average is second. And all it's really doing is measuring the momentum of price for you. Hey, price going up, great. Moving average should go up. Price going down, great. Moving average should go down. As long as price is trending. And when it stops trending and there is some sort of consolidation, your moving averages are going to go everywhere, right? They're going to go everywhere. Twists and turns, twists and turns, twists and turns, like a roller coaster. So keep in mind of these things when you're using your moving average. Does your time frame matters? It matters only because of how many candlesticks that price will be measuring. Does this moving average open or close source matter? And the number that's based on you. You should test these things out. I've tested that. I like 13, 16 when price is trending on higher time frames. I like it because it helps me measure what I need to see. I'm a current price action trader. I don't go to the left when price is trending on higher time frames. I like to stay to the right. So I like when my moving averages measure what's going on the chart right now. You may be a person who likes to see the overall trend and what price is doing over a specific amount of time. So the higher numbers for your averages may work best for you. So you have to test these things. And I love closed prices because I enter my trades based on closed prices, closed candlesticks. I want to know what price that you've closed at because that's important to me, because it helps me get into my trades. So do I use moving averages every single day? No, I use them as price moves to the right. So you'll have to sit and play with some numbers and know what you like and know what you're looking for and know how you're going to use them. Are you going to use them every time price rejects the moving average? Or are you going to use it in confluence with what you're using, whether it is support and resistance, trend line, supply and demand, advanced patterns, whatever the case may be? And at what place within your rules does a moving average comes? My moving average is very last. Very last. It's an indicator because it lags. Why? Because of the number of candlesticks it needs to measure in order to get a true range, a true average. Okay, so I pray that this moving average example helps you. If there's more value that you can add, please comment below the video and add. If you have any other questions, please ask. Okay, so make sure you guys like the video, share the video, and follow me for more, and I'll talk to you guys later.